Hello and welcome everyone to my channel Stories and Fundas of Life and Finances, where you get to know about spendings, savings, investments and how to keep a track of your investments in general. So let's get started. From the title of the video, you might already be knowing that today we are going to discuss about bank fixed deposits. All of you might be knowing about fixed deposits. They are available in banks as well as post offices. Also, there is something called recurring deposits which is very similar to fixed deposits, although that we will take in another video. Today's session is all about bank fixed deposits. So we will learn today how to calculate the interest earned on bank fixed deposits, what about the taxes being paid, and what about the TDS being cut. Remember, these two are different things, the tax and the TDS. We will come to that in the later part of the video. So let's get started. Fixed deposits are available with all kinds of banks, be it private sector or public sector. However, the interest rate earned on various banks might differ from time to time, from tenure to tenure, and from the type of bank. Usually, it has been seen that bigger banks, because they need lesser amount of money, they are willing to give a lower amount of interest on FDs as compared to the smaller banks. So where should you invest the FD money? Be it any type of bank you are investing it, you should be able to calculate the sum of money you will be getting at the end of the period, right? So let me explain how the interest is calculated. Suppose you are investing an amount of 10,000 rupees with an interest rate of 10% in a bank. We see that in most of the banks this interest rate is compounded on a quarterly basis. So what do you mean by compounding on a quarterly basis? If you take the interest for the whole year to be 10%, for each quarter it is 2.5%. An amount of rupees 10,000 invested for a quarter at an interest of 2.5% will give you a return of 250 rupees. What happens at the end of the quarter? Well, this 250 rupees gets added to your principal. So at the start of the next quarter, your principal becomes 10,250 rupees. As you can see, due to this compounding effect, you will be getting more and more overall interest on your investments, although the amount invested at the start of the period remains the same. However, this is not the case if you are taking out the money at the end of every quarter. You have to tell the bank that you want a cumulative interest on your account. So we see that rupees 10,000 invested over a period of 1 year at 10% will not give you just 1,000 rupees but a little more than that due to this compounding effect. So now you know how to do the calculations in case of interest. Now we will see how to calculate TDS and how to calculate tax. TDS is calculated on your investments in fixed deposits on a yearly basis. Earlier, this limit used to be 10,000, above which TDS was deducted. But now it has been increased to 40,000 rupees for an individual and 50,000 rupees for a senior citizen. If you are not a senior citizen and the interest accrued for the whole year is more than 40,000, then TDS will be cut on your FD. TDS is cut at a rate of 10% if you have submitted your PAN, and at a rate of 20% if PAN is not submitted for your account. You should take care that PAN is submitted. Well, how to check that? You can always go to your Form 26AS in the income tax website and check whatever amount is being deducted by the bank, it is deposited in your PAN. In this way, you can ensure two things. One, PAN is enabled in your account, and second, the deductions are reaching the correct account number. However, if you have filled Form 15G, which is for an individual, or 15H, which is for senior citizens, and given it to the bank, in those cases, tax will not be deducted from your FDs. This limit of 40,000 is on a yearly basis, and tax is also deducted on a yearly basis in your account. Now let's talk about income tax applicable. See, income tax is a totally different ballgame from TDS. What TDS does, it cuts the amount from the source of your income. while income tax depends on your overall income through the year and the tax bracket and in which age category do you fall. The tax calculated on fixed deposit is same as the tax bracket in which you are falling. So it can be 10%, 20%, 30% or even 0% depending on which tax slab you are. So just in case tax is not applicable to you, you have to file the income tax returns so that you can claim the tax back from the government. However, beware, if you are in the tax category of 20% or 30%, the TDS has been cut only 10%. The remaining amount you should be paying as advance tax. Many people don't do this, and at the end of the year they have to pay the tax along with the interest and the penalty. So be aware of that and pay your advance tax on time. One word for the senior citizens. Advance tax are not applicable on senior citizens. So they don't have to worry about it and they can pay the total tax at the end of the period when you are filing your returns. So today we have discussed how to calculate interest on your fixed deposits, how to calculate the TDS which will be deducted off your account, and how to calculate the interest as well. If you have any further questions regarding fixed deposits or these calculations, kindly write to me in the comment section and I'll be replying to each one of you. If you want to know more about other similar products, for example, company deposits, recurring bonds or other such things, please write about them in the comment section and I'll bring videos regarding the same. Here comes today's story of the day. Did you know why are banks called banks? Because in earlier times, the merchants used to trade on the banks of the river and there they used to deposit their money with people specified for this purpose. They used to keep their money and give them interest on them. So that's how banks originated and that's why they are called banks. You didn't know this? Well, now you know it. Before signing off for the day, I would like to remind you that Sovereign Gold Bond Scheme of Government of India is already open and it will be open till 12th of this month. If you want to know more about sovereign gold bonds, see my previous video and you will get to know more about these bonds. If you found this video useful, please hit the like button, subscribe to my channel for more such videos and also share this video with your friends and family so that they know more about these financial products and we may propagate the financial literacy to all people. Also, please follow my Twitter, my Instagram and my Facebook pages so that you are updated with lots of information which I keep sharing there from time to time. Signing off now. May you all have a great day and a lovely rest of the week. Take care. Bye-bye.